Good day Forex trader. Your USD Forex signal, Euro downward pressure to continue. There is a likelihood that it will continue falling as bears target the next key support level at 1.0900. Bearish view. Sell the Euro USD pair and set a take profit at 1.0900. Add a stop loss at 1.1120. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 1.1070 and add a take profit at 1.1150. Add a stop loss at 1.100. The Euro-USD pair remained in a tight range in the overnight session even as Jerome Powell reiterated his hawkish stance. It is trading at 1.0987, where it has been in the past few days. It is about 1% below the highest point last week. Ukraine crisis in focus. The Euro/USD pair was unchanged as investors continued focusing on the ongoing crisis in Ukraine. After signs of progress emerged last week, the situation has dramatically changed in the past few days. Russia has continued to bombard major cities like Kiev and Mariupol. In a statement, Russia said that it will continue its special military operation even as reports said that over 10 million people have been displaced in the past few weeks. Therefore, it is unlikely that we will see an end to this crisis anytime soon. This trend could lead to more demand for the US dollar as investors move to its safety. Indeed, data published by the CFTC last week showed that positioning by large hedge funds and other speculators had shifted to the US dollar. There will be no major economic data from the United States and the European Union today. Instead, investors will focus on speeches by ECB Chair Christine Lagarde and Vice Chair Luis de Guindos. Their statements will also have minimal impact on the Euro-USD since they made their decision almost 2 weeks ago. In a statement on Sunday, Guindos reiterated that inflation continues to pose substantial risks to the European economy. He also warned that the situation will continue because of the crisis in Ukraine. Therefore, with the Fed and Bank of England raising rates, analysts expect that the ECB will not be left behind for too long. Euro-USD forecast. The 4-hour chart shows that the Euro-USD pair has been under pressure in the past few days. It has moved slightly below the middle line of the Bollinger Bands. Further, the pair has managed to move below the 23.6% Fibonacci retracement level while the MACD indicator has made a bearish crossover. The pair also seems like it has formed a double top pattern and has moved below the ascending trend line. Therefore, there is a likelihood that it will continue falling as bears target the next key support level at 1.0900. On the flip side, a move above the key resistance level at 1.1100 will invalidate this view. GBP USD Forex signal, drop to 1.300 can't be ruled out. The pair will likely continue with the bearish trend today as investors reflect on the hawkish statement by Jerome Powell. Bearish view. Set a sell stop at 1.3120 and a take profit at 1.300. Add a stop loss at 1.3200. Timeline, 1 day. Bullish view. Buy the GBP/USD pair and set a take profit at 1.3300. Add a stop loss at 1.3150. The GBP-USD pair held steady in the overnight session as investors refocused on the upcoming UK inflation data scheduled for Wednesday. They are also assessing the interest rate decisions by the Bank of England and Federal Reserve. It is trading at 1.3134, which is slightly below the overnight high of 1.3214. Fed and BO. There were no major economic data from the US and UK on Monday and the same trend will continue on Tuesday. Therefore, analysts and investors will continue assessing last week's decisions by the Federal Reserve and the Bank of England. On Wednesday, the Fed decided to deliver its first interest rate hike since 2018 in a bid to deal with the rising inflation. It increased rates by 0.25% and signaled that it will hike in the remaining 6 meetings of the year. The Fed anticipates that it will have 3 rate hikes in 2023. In a statement on Monday, Jerome Powell reiterated his view that higher interest rates are necessary considering that the labor market has tightened while inflation has surged. He expects that inflation will keep rising in the coming months because of the ongoing crisis in Ukraine. Meanwhile, the BOE also decided to hike interest rates on Thursday last week. Like the Fed, the bank decided to hike interest rates by another 25 basis points. It was the third time that the bank has raised interest rates in the past few months. With no economic data expected from the UK on Tuesday, investors will be waiting for the upcoming consumer inflation numbers scheduled for Thursday. Analysts expect these numbers to show that prices continued rising in February. Sadly, the situation will continue worsening as the crisis in Ukraine pushes prices of most items like commodities and fertilizers higher. GBP/USD forecast. The 4-hour chart shows that the GBP/USD pair has been in a strong bullish trend in the past few days. On Monday, it managed to move above the key resistance level at 1.3200. It then retreated and moved below the 23.6% Fibonacci retracement level. The pair has moved slightly below the 25-day moving average while the MACD has formed a bearish crossover pattern. Therefore, the pair will likely continue with the bearish trend today as investors reflect on the hawkish statement by Jerome Powell. If this happens, the next key support will be at 1.3000. AUD/USD Forex signal, consolidating below 0.7430. Today's AUD/USD signals. Risk 0.75%. Trades may only be entered before 5 p.m. Tokyo time Wednesday. Short trade ideas. Short entry following a bearish price action reversal on the H1 time frame immediately upon the next touch of 0.7430, 0.7439, 0.7454, or 0.7513. Place the stop loss 1 pip above the local swing high. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. Long trade ideas. Long entry following a bullish price action reversal on the H1 time frame immediately upon the next touch of 0.7321 or 0.7275. Place the stop loss 1 pip below the local swing low. Move the stop loss to break even once the trade is 20 pips in profit. Remove 50% of the position as profit when the price reaches 20 pips in profit and leave the remainder of the position to ride. The best method to identify a classic price action reversal is for an hourly candle to close, such as a pin bar, a doji, an outside or even just an engulfing candle with a higher close. You can exploit these levels or zones by watching the price action that occurs at the given levels. AUD/USD analysis. I wrote last Tuesday that the technical picture had become considerably more bearish now, so I was looking for a short trade from a bearish reversal at either 0.7207 or 0.7259 if either trade set up over the day. This was not a good call as although it was enough to keep out of trouble, the day was an up day and the price continued to rise strongly over the remainder of last week as risk sentiment recovered in the markets, boosting the AUD at the expense of the USD. This move now seems to have run out of momentum, and we see the US dollar strengthening everywhere over recent hours, especially against the Japanese yen, but it should be noted the Australian dollar is relatively strong. However, this is unlikely to last, as we have 3 resistance levels nearby starting at 0.7430 which the price has been unable to breach over the past few days. We have seen the price consolidate, and now seeming to be starting to make a crucial drop. I will definitely look for short trades in this currency pair today. A good swing trade could set up if the price gets back to test 0.7430 and fails there. Another strategy could be to wait for strongly bearish hourly closes below 0.7375 which seems to be the lower boundary of hourly closes for the current consolidative price range. The support at 0.7321 looks likely to be strong, so it may be wise to take profits at 0.7325.